Do you want to know why borrowers get denied for a home loan? Here are the top 5 reasons. I'm going to give you some examples so you can avoid making the same mistakes. Number 1 issue, credit issues. A low credit score isn't the only red flag that's going to cost you an approval. Lenders look at the overall credit health, not just that number. Late payments on credit cards or loans, even one recent late payment can ding your score and show lenders you're not consistent with obligations. That ding could be 100 points. I know, it's happened to me years ago. I was late once, like in 5 years, by no fault of mine, and my credit score dropped 100 points. So I got first-hand proof. High credit card balances. Carrying balances close to your credit limit signals risk and it lowers your score. Too many recent credit inquiries. Applying for multiple loans or cards at once can make you look desperate for credit. And lenders do not like desperate. Old collections or charge-offs. Even if they're years old, unpaid collections still show up in your report and can raise concerns about responsibility. No established credit history at all. Having thin credit is almost as bad as having bad credit. Why? Because lenders can't measure your reliability. Second reason, insufficient income or unstable employment. It's not just about how much you make. Yeah, you make a lot of money, that's great. It's about consistency. You got to make it consistently and whether that income meets the lender's guidelines. Every lender has different guidelines. Job hopping without a consistent history. So if frequent job changes without a solid track record of steady work will make lenders very nervous. They don't like nervous. Like I said, why are you changing jobs so often? What's going on in your life? That's what they're thinking. Is he reliable? He or she reliable? The income, they might not be having to work tomorrow. Anyway, gaps in employment. Breaks longer than a few months usually need explaining and documentation. Too much income from unstable sources like cash gigs. If it can't be verified with pay stubs or tax returns, it often cannot be used. Bonus or overtime not documented for 2+ years. Lenders usually require at least 2-year history to count those variables as income. If you get it, let's say 1 year every 6 months or something, it's not consistent for the last 2 years, they're not going to count it. Down payment and asset problems. It's not just about having money. You can have all the money in the world. It's about showing where it came from and proving it's yours. Not enough saved for down payment or closing costs. If you don't have the funds, the deal can't close. Simple as that. Also, in addition to the down payment, you will need between 2 to 5% of the purchase price for closing costs. A lot of people forget about that. Oh, I got enough for the down payment. I got 10% for down payment. Yeah, you've got 5% more for the closing costs? Well, I didn't think about that. Think about it. Large unexplained deposits in bank accounts. Any big deposit needs a paper trail. Otherwise, lenders assume it might be borrowed or perhaps illegal, like money laundering, for example. I don't know. Using unverified gift funds. In other words, money from a family member, a friend, a boss or something. It's got to be sourced. It's got to be a letter from them saying this is a gift. You do not have to repay it. Because if not, it becomes another loan and the lender's not going to like that. Moving money around too close to closing. Constant transfers between accounts make it hard to track the funds. It drives the underwriters crazy. Not showing reserves when required. Some loans require you to have extra months of mortgage payments saved after closing, and failing to prove this can sink the approval. Fourth, debt to income ratio too high. Even if you're making good money, too much debt can kill the deal because lenders see very limited room for mortgage payment. That's all they care about is that mortgage payment. High car payments. A big auto loan can eat up more of your monthly budget than you realize. Student loans in repayment. Even if you're on an income-driven plan, those payments count towards your ratio. Maxed out credit cards. Minimum payments may look small, but they all add up together and they push up your overall debt load. Co-signing on someone else's debt. Don't do that. Even if you're not the one paying, lenders count it against you because if the other person stops paying, you're responsible for that loan. Adding new debt during the loan process. Buying furniture or a car before closing can push you over the limit and cause a denial last minute. I've seen it so many times. People get excited. Oh man, we're going to close on the house. Let's get some furniture. They put $12, $13, $15, $20,000 on furniture. Next thing you know, the DTI is blown out and they get denied last minute. Now they got a truck full of furniture they paid for. Fifth one, documentation and application errors. These are so preventable. Just sometimes the issue isn't financial. It's paperwork. So incomplete or inconsistent information probably will derail the approval. Inconsistent income tax returns versus pay stubs. If your documents don't line up, don't match up, lenders will pause until it's clarified. Missing pages and bank statements. Even the blank pages matter. Leaving them out delays the process. You've seen when you download your statements from your online account, there'll be like 4 pages. They're numbered. It'll say 1 of 4, 2 of 4, 3 of 4, 4 of 4. If the last one is blank, lender doesn't care. It knows it's missing a page because the 4 of 4 is missing. And they didn't know it was blank. They can't assume that it's blank. There might be something on there. Not disclosing all property owned. Leaving out other mortgages or real estate creates red flags in underwriting. You might have another property, you're paying taxes, insurance, homeowner association, or special assessments on it. That's going to affect this lender right now. Incomplete application information. Errors in your address history, your job history, small things like that, or debts can cause unnecessary verification delays. Failing to respond quickly to underwriter requests. You get a request, you need to respond ASAP. Because if you don't provide documents in a timely manner, lenders can't move forward and may decline the file. I know it's a lot, but we're talking about borrowing large sums of money. I mean, I'm sure you would do the same if you were lending those large sums of money too, right? I know I would. But the good news, all of these issues can be fixed or even prevented if you know what lenders are looking for, of course. If you're not sure where you stand or if you've been denied in the past, don't give up. I help borrowers like you find the right path to approval every single day. At the end of this video, you'll find all my contact information. Reach out to me for a confidential, no obligation conversation, or just type the words loan denial in the comments and I'll send you a PDF of all these mistakes I've been talking about. Thanks for watching.